Right, we are now on another topic, which is the trading account. So let me get my pen here. Okay, as usual, I think this is our presentation on mass comm studies. So let's see where we are. Okay, let's see where we are. We agreed that we are done with the bookkeeping, double entry, and today we want to move on to what we call trading account. Okay. All right, I think you can actually see my details. This is my number. You can contact me for any corrections, any queries that we have, and we can discuss. Okay. Let's see what we can do today. What we can do today, today's lesson. Okay. I think today we want to cover the trading account, the trading account. So let's start. I think you can. I want you to get your pen, your paper, your calculator to be very critical in this lesson. Okay, let's get started. Trading account. What is a trading account? This is where gross profit is calculated. That's where we calculate our gross profit. I think you can actually see its gross profit. Okay, the gross profit, it means this is not the net profit. We have got two profits that we have in accounting. That is the gross profit and the net profit. But we are going to start with the trading account. So in the trading account, we compute what we call the gross profit. But this also raises some questions that what is gross profit? Gross profit is determined as follows. We say gross profit is equal to turnover minus cost of sales. Then someone also raised another question: what is turnover? What is turnover? What is cost of sales? Let me also redefine turnover. Turnover is the difference between sales and sales returns. I think this is very clear from my definition that sales, these are goods sold. Sales returns, these are goods retained by customers. Okay. Then the question also comes, what is cost of sales? Cost of sales can be abbreviated like this one. Okay, COS. Okay, cost of sales determined as follows. Say opening inventory, which is our opening stock, plus our purchases. Okay, plus our purchases, okay, plus our carriage inwards, minus our closing inventory. Okay, this is the background that you need to have. Okay, let us proceed to the next slide so that you can actually see. Okay, the next slide. We can actually see this. Let me erase this one so that you can start on a fresh page. As you'll be taking down your notes, I'll be erasing these marks so that you can actually move on to another stage. But I think you're following. This is what we need to know. Okay, let me move on to the actual trading account or the income statement. Okay, the trading account, the actual trading account or the income statement. Okay, this is the trading account or the income statement. It should appear like this. Let me remove this one so that you can actually see this. Okay, you need to put the heading first. So it's written trading account for the year ended 31 December 2020. Okay, then what follows after this, you need now to put whatever is necessary. Okay, I hope you manage to take the what? You manage to take the heading. The heading is like this. Okay, I think I want to take my pen here so it might obstruct you. Okay, so we are going to start with ourselves. These are fictitious figures that I've just placed there. So it's 400,000 minus 400,000, which is our sales minus sales returns of 1,000. We get how much? 390. So you put a line after this. When you say less, you put a line. Okay, so we're going to say this one minus this one. Then what is this sales minus sales returns? We get our turnover. This is our turnover. You do not underline below this. You leave it like that. Then you say less cost of sales. You're supposed to double underline or just underline to indicate that there's a demarcation. Then we need to determine our cost of sales as we have clarified in our previous slide. It's our opening inventory, which is 10,000 plus 95,000, which is our purchases, plus our carriage inwards, which is 5,000. That's 110,000. You put a line again to demarcate that you have dealt with the figure. Okay, the network is back. Let's resume our lesson. Let me show the slide again. Okay, I think that was connectivity issues. Okay, so I think we have covered this. Let me take this one to this side. We are saying we are going to put a line on this one again. We put a line where we get a total of 110. We less our purchase returns. When we buy goods, purchases, these are goods bought for resale, right? Purchases are goods bought for resale, but we can have a situation whereby we return some of the goods. We call them purchases returns. We less, so 110 minus 10, we get 100. Then we less our closing inventory. This is unsold stock. It is actually given in most cases. So we are going to less, we put another line. Be careful to put this line. So we put this line from this extending to this. Okay, remember there was a line here before our network problem. I'll be still recording, right? So we are going to say 399 minus 99. Okay, we get 300. This becomes our gross profit.